What's up, you guys? My name is Danielle, and on this channel we talk about personal finance with a focus in stock market investing. And I know I've been a little bit slow on putting out videos. That's because I'm busy just cleaning up my apartment as we're getting ready to stage our apartment and eventually move in November. If you guys have any tips or tricks about how to stage your apartment or get a better price when you're selling your property, let me know in the comments down below, and that would be greatly appreciated. Also, it'd be helpful if you could leave me an early thumbs up, as it really helps my channel grow before we get into the content. And today on this video, what we're going to be doing is talking about two different stocks that I'm interested in buying in the month of August. And both of these stocks are traded on the New York Stock Exchange. So if you're a Canadian, you can buy these on QUESTRADE, or you can buy them on WealthSimple Trade if you want. However, just know you have to convert Canadian dollars to American dollars. And if you guys are trading on QUESTRADE and you want to know how to convert Canadian dollars to American dollars for the cheapest fee, you should check out this video right up here. It's talking about Norbert's Gambit and how to do it. And I show you a live example of how I exchange 1,000 Canadian dollars into American dollars. Without further ado, let's jump right into the video. The first company we're going to talk about today is LMND. On July 2nd, LMND IPO'd on the New York Stock Exchange, and they had a valuation of $1.6 billion. The shares shot up from $29 all the way to $69 on the first day of trading, and it ended the day with a valuation of over $3 billion. Clearly, it seemed like the IPO was priced very conservatively as investors jumped in on this stock. So what makes LMND so exciting to the general investor? LMND is an insurance company, but not your typical insurance company. Not only can you obtain instant quotes, you can also get insured in as little as 90 seconds. There's no haggling or sleazy salespeople to fight with over the phone. And when it comes to insurance claims, LMND does 1/3 of their payouts within 3 minutes. This is compared to the traditional insurance broker, which may take you weeks, and the traditional broker is also trying their hardest during those weeks to find reasons not to pay you. And this may be through the fine print on the documents that you signed. So how is LMND's platform able to become superior than other insurance businesses, which have been operating for decades, if not a century? LMND ultimately took a technology company's approach to the insurance business. They deployed the model of delighting customers first, growing fast next, then getting predictive data and having their machine learn. So starting off, LMND ultimately delights their customers first. And we can see this if we take a look in the App Store or ClearAssurance. Currently, LMND scores the highest amongst any other insurance company out there. They're also very transparent with their fees, and you can see this right on the website on how the fees are distributed. LMND takes roughly around 25% of the fees, which is not clearly stated. Then the rest of the profits go towards a pool of money that's either used to pay out claims, or if it's not used at the end of the year, it's donated towards charity. And I think this angle of LMND donating any extra fees that are left over at the end of the year is a great play, and it resonates with our customers. Because as a customer, when you're paying this fee into this empty void of insurance, and if you never end up claiming insurance, you're probably wondering where your fees go. And it's probably to fatten up the bonuses of those insurance agents. But LMND doesn't take these excess fees and fatten up their own pockets. They actually give it out to good social causes that you, as a customer, have a hand in. So as a LMND customer, you're able to select which charity your excess fees go towards. Another way that they have a delightful experience with their customers is the application process. It's roughly around 13 simple questions that you have to answer before you get insured. And you can get insured within 3 minutes, not having to wait a day or two or even a week. LMND can also offer some of the best prices out there because they have little to no agent involvement. And usually when you're dealing with traditional brokers, each person has to go through an agent, which will ultimately bump up fees. 1/3 of the claims that LMND receives are settled within 3 minutes with their AI bot Jim. Jim is probably able to settle a lot of these claims because they're smaller claim amounts, and it's not worth it for LMND to have an agent inspect each individual claim. And when you have an agent involved, this will ultimately jack up fees. So with LMND's approach of using Jim as an AI bot, they can reduce their expenses on agents and settle claims quicker. And when LMND delights customers, those customers are going to tell their friends and family to sign up as well. And this is how LMND continues to grow faster. So right now, 90% of LMND's customers are millennials. And this is no surprise because millennials are the ones who are more willing to adopt new technology. Those who are in the baby boomers or in between baby boomers and millennials, they're less likely to adopt technology because they're more stuck into their old ways, and it's harder for them to change from their traditional insurance brokers who they have relationships with over to a new platform which has chatbots. But millennials have no ties to traditional brokers and they're used to technology platforms. And Lemonade knows that everyone goes through predictive life cycle events. So as you start out as a young single person, you likely will be renting an apartment. And if Lemonade can capture you then they know that eventually you'll either buy a condo or a house, get married, have kids, buy a new house, and basically the value of this customer will grow over time, and Lemonade has put in the dollars and the efforts of obtaining customers early on. And ultimately, the big payout for Lemonade comes when the customers move on to these next life stages and they become a higher value customer. So Lemonade's strategy is a long-term game. It's reported that people who start off as renters and move on to become condo owners, their insurance premiums can go up by 12 times. So Lemonade capturing someone who's renting and paying $5 per month for insurance may be paying around $80 or so for insurance when they get their own condo. And right now, 10% of their condo policy customers were actually former renters. So this is some of the growth that they've already seen within their 3 years of operation. Not only are renters who move on to become condo owners seeing an increase in premium, renters are also increasing their premiums over the years. And that's because when you start out as a renter, you don't have that much stuff to put into your apartment. You have very little risk as a renter with maybe $1,000 in assets, but as you continue to work and pay off your student loans and accumulate more stuff, you may want to up your dollar coverage from $1,000 to maybe $20,000 when you buy a new TV, new speakers, and maybe a new bike or other expensive things like jewelry. So Lemonade has seen on average a 56% increase in renters insurance. And as Lemonade grows faster and gains more customers, Lemonade's dataset is also growing rapidly as well. And as their dataset grows bigger, they can see which pieces of data are useful for prediction or not useful at all. So the insurance business is basically built off of probability theory. So how probability theory plays out in insurance is how likely a specific customer of a specific type is going to make a specific claim. So for example, how likely is a male who is 27 years old and who smokes is going to get into a fire accident in their apartment? This is going to be a lot higher than a female who's maybe 40 years old with kids and doesn't smoke. And Lemonade's approach to data collection is a lot more efficient than traditional brokers. Currently, Lemonade says they collect around 1,600 different data points with their customer interaction. And this is a customer interaction through an AI chatbot, not even a real person. Whereas traditional insurance brokers, when they meet with their clients, they ask a series of 20 to 50 questions, which is 20 to 50 data points. And how the AI chatbots are able to get a lot more data is they pick up on different cues that customers give, not just through their answers. They pick up on things like the language that they use and the grammar that they use. And to see how big Lemonade's data set currently is, they have around 730,000 customers, and they built up this customer base within 3 years. And with all this data that Lemonade collects, they're able to feed this data into their machine, which ultimately learns and deploys different solutions across their business. Lemonade is able to take this data and break down their customers into groups and subgroups within those groups. And they can break down these subgroups into even more subgroups because they just have so much data on these customers. And not only does Lemonade collect data from the initial interaction with the customer through the chatbot, they can also collect data from the customers throughout the years as they make claims or don't even make claims. There's one instance when Lemonade first started out where they were buying data sets from the industry to put into the machine. So it was a pretty dumb machine at first, but they found within one group that the insurance industry categorized, they saw a variance of 600% with how often people filed claims within this group. That is crazy if you have a 600% variance within one group of people. So Lemonade was able to go into that group and break that group down into a subgroup to have less variance within the subgroups. And how this helps Lemonade's business is that they're able to offer lower premiums to those people who never file claims or file claims very rarely versus a higher premium to those higher risk customers, and maybe actually deterring them away from using Lemonade's platform and putting Lemonade at a higher risk. So ultimately, what this machine learning does is help delight customers, because the machine learnings can actually inform the business on how to better operate and delight the customer. Things like being able to service customers through their AI chatbots instead of having to have them wait on the phone for 1 hour to reach a customer representative, and also lowering premiums for those people who are lower risks. And Lemonade's results have proven that their model is doing very well over the years. They saw a decline of 296 percentage points in their gross loss ratio. So clearly the machine has learned over time and provided a better experience for the customers, as well as reducing the loss on Lemonade's business. And I think the power of machine learning is what makes Lemonade a game-changing business. And if we turn over to the total addressable market size for Lemonade, this is what gets me as an investor even more excited. The homeowner insurance market size is $105.7 billion, and it's increasing by 1.3% year over year. The growth rate of this market is not very exciting. However, the huge market opportunity is what gets me excited about Lemonade. And currently, Lemonade has a market cap of around $3 to $4 billion, so they have a lot of room to grow. On top of the homeowner insurance market, the renter's insurance market in the US alone is $3.8 billion and is growing at 0.8%. And they recently entered the pet insurance market, which is $3.33 billion as of 2018, and it's anticipated to grow by 16.3%. And I think right now with coronavirus and people staying at home and not traveling, this is going to only fuel the pet market. And I've seen this myself within my local Canadian market, where pet prices are just going astronomically high. In the winter, when I got my dog, I paid about $400 for her. However, if I scour the markets right now, the lowest prices I can find is $1,000 for some sort of mixed breed that was raised on a farm. Now, if we turn over to management, we can see that their founders are currently still executives within the company. Daniel Schreiber has a background in law and has held many VP business development positions in the past. Shai Wenninger is the founder of Fiverr, and he also founded a few other startups and has a strong background in product design. So I think these two founders are the key to the business and how they've grown so quickly, because they ultimately came up with a technology approach in the insurance business and proved it out that it can work. Now, if we turn over to the financials, we can see that they have around $274 million in cash equivalents, and $124 million in total liabilities on March 31st. So they have more than enough cash to cover all their liabilities twice over. And just before the IPO, CNBC reported that Lemonade actually had $567 million in cash. Not really sure how they got that between March and July, because I don't think they did another raise, but they reported they had $567 million. And Lemonade is going to be reporting their first quarterly results on August 12th, I believe. They also raised over $300 million in their IPO. That would put their total cash position somewhere around $870 million. And they currently have a market cap of $3.12 billion as of filming right now, and this may fluctuate a little bit because I'll be editing tomorrow. They grew their revenue by 150% in their March quarter, and they tripled the revenue from 2018 to 2019. The net losses grew by 75% in their latest quarter in March, which tells the story that Lemonade's revenue is increasing at a quicker rate than its expenses, which is a great sign. The customer count has also doubled over a year, from 370,000 to 720,000 customers. So from these brief looks at their financial statements and their customer growth, I think Lemonade is very exciting as a business, and this is why I'm looking to invest into it in the month of August. Especially as Lemonade's prices have recently come down from the $80 level all the way down to the $58 to $59 level as of filming today. I think Lemonade right now is being overlooked by a lot of the traditional investors who would invest in the insurance space, because they see insurance through one lens, which is the traditional method. However, they don't understand Lemonade's approach, which is the tech approach to insurance. But when I look at Lemonade, I see Lemonade as tackling the fundamental problems with insurance today. Right now, people have this perception of insurance companies as being scummy and scammy. Basically, these brokers are there to try to sell you different services and upsell you on other services and trying to get you to just pay into their annual bonus. And for people who never claim insurance, they hate this because they're paying into this black hole, which they've never been able to claim back any of that money. So they would have been better off in not paying insurance and just keeping that money and taking their chances. Whereas people who have made claims in the past, a lot of people report that they're not able to make the claims or claim back all the losses that they had because the insurance company had some fine print in the documents that they signed that prevented people from making claims. So Lemonade is taking this approach of taking a fixed fee and not having any sort of incentive for their agents or for the claims department to deny people of claims or upselling on different insurance products. Lemonade just takes a fixed fee, and whatever is left goes to either paying out claims or goes to a charity. So people trust Lemonade a lot more than the typical traditional insurance brokers, which are out there to basically just take your money and fatten their own pockets. And with a business model of delighting customers, growing fast, gathering data, and machine learning, which has proven to work over time, this is what makes me as an investor super excited to put my money and invest in this company and see massive returns in the next 10 years. And if you're interested in investing in this company, you should definitely take the time to watch this 30-minute video on their investor relations page, because the founders actually go there and explain their business and their thinking behind it all. And it was very informative to me as a potential investor in the business. It shows you how high level thinker these people are who are running Lemonade's business, and this is ultimately why I would trust them with my capital. The second company that we're going to talk about today is Appfolio. And I bet most of you guys have never heard of this company. So Appfolio was founded in 2006, and their mission is to revolutionize vertical industry businesses by providing great software and service. Their two business verticals that they're tackling are property management and legal businesses. Their main product is a cloud-based property management software which helps streamline tasks like billing and communications for property managers. They also have a real estate AI assistant which they recently acquired through an acquisition, and she integrates with Appfolio's property management software as well as their competitors like RealPages. Lisa can help property managers save time/employee count by responding to clients' questions about listings, scheduling property viewings, and scraping market data to put together daily reports on local real estate markets. On top of their first platform, Appfolio has a second platform that services businesses operating in the legal industry, and their second platform is called MyCase. So what MyCase does is it helps with time tracking, billing, appointment scheduling, e-signing, and communications. So Appfolio is tackling all the accounting and administration tasks that you can automate with the platform, and they let legal experts do what they do best. From a customer point of view, Appfolio software saves time and ultimately employee count for these businesses, which will help reduce their expenses and drive more profitability. I think that as Appfolio continues building out software platforms in different business verticals, they're going to be able to take some of their modules that they created for the earlier platforms and plop them right into the new business vertical, because there are many administrative tasks that are similar between business to business. Things such as billing, signing, and communications are all key amongst all businesses. I think modules that do these things as well as other common administrative tasks will be able to be ported over from these earlier platforms into the new ones, and overall reducing development cost. Now if we turn over to Appfolio's customers, if we look at their real estate property management software, they currently serve 14,729 property managers, and these property managers manage a total of 4.8 million units. And Appfolio has grown their property manager account by 1,300 property managers year over year. According to Statista, the US rental market has 43 million occupied rental units. So this will put Appfolio's market penetration to around 10% right now. The total addressable market for property management software is around $2.9 billion in 2020, and it's growing at a 7% compounded annual growth rate. On the legal side, Appfolio has around 11,100 customers, and this is up 600 from a year ago. The global legal operations software market is to reach $3.5 billion by 2027, growing at 14.2% each year. As of 2018, the market size was $1.1 billion. Appfolio currently doesn't break out their revenue in terms of their MyCase revenue versus their property management software revenue. However, they have stated that their property management software accounts for more than 90% of their revenue. So right now, Appfolio's MyCase revenue is probably under $7 million, maybe in the ballpark of $5 to $6 million. And if the total addressable market for legal software is going to be $3.5 billion by 2027, Appfolio has a lot of room to grow still. In between 2017 and 2018, Appfolio actually reported a customer retention rate of 97%. And this is only possible because they are a software as a service platform, and the fact that their platform is very specific towards property managers or legal firms, it's very difficult for these businesses to move away from Appfolio software into someone else's software. It's a pain in the butt when you have integrated all your processes and all your data is on Appfolio's platform, and you want to take it off in a nice, neat format to be able to port directly into a competitor's platform. And Appfolio obviously makes it very difficult for them to port out all their data, and you probably have to do a lot of manual pulling of data and entry into the new platform. They're not going to export it as a nice, neat table that's going to fit every single competitor platform out there. And if you guys as investors have been following SaaS businesses, you'll know this is true not just across property management platforms or legal platforms. It's the same across every single platform out there that services businesses. Now, if we take a look at their income statement ending March 31st, they earned $72.5 million, which is a 27% year-over-year increase. After expenses were deducted, their net income was $2 million, or 6 cents per share. If we take a look at their expenses, they grew by 22%, which is less than the revenue growth. And this is a positive sign as an investor, that the business is able to grow their top line faster than their expenses. And if we look at the current ratio, they have a current ratio of 2.4, which is more than healthy, with total current assets of $92.7 million and total current liabilities at $38.6 million. They are also cash flow positive, and not only that, they are cash flow positive on their operating activities. This is important to distinguish because it shows that the business alone is able to generate positive cash flow. Oftentimes, companies who are in the growth stage will show positive cash flow, but when you dig a little bit deeper into a cash flow statement, it's because they performed an equity raise. And it's impossible to run a successful business if you're sustained by equity raises. Now, if we look at the risks going forward, they have a large competitor, RealPages, which has a larger market cap than Appfolio. And they also have a competitor named Yardi, which is not yet public, so you don't have too much information about them. But digging through a bit of the forums, I actually realized that Yardi is a cheaper option than Appfolio. Appfolio actually services property managers who are sort of the medium size, where they maybe have around 20 to 100 units, versus Yardi, which services clients with smaller portfolios, anywhere from 2 to 20 properties. And as COVID-19 is currently ramping up in the States, Appfolio is less likely to do in-person demos, which will ultimately hurt their sales, I believe. This is because when you're doing sales in person, you're able to judge the salesperson's character a lot more closely versus online in a Zoom call. And this not only goes for Appfolio trying to sell their software platform to their customers, but it also goes for renters. Renters are probably less likely to go out of their house to see new rental properties, and currently there are more restrictions on renters visiting properties. And this is ultimately why we probably saw a sell-off in Appfolio stock. Now, my closing remarks on Appfolio as a business, I think Appfolio is not at a huge risk of a bigger player coming in and trying to take over the market, because the size of the market that Appfolio is tackling for both the legal businesses and the property management businesses is small for these big fish to come into. With market sizes of around $3 or $2 billion, this is not worth it for companies like Intuit, for example, that makes QuickBooks, to do a specialized software for the legal and property management market. Lastly, the stock is currently down 16% as of August 3rd, which is the day I'm filming right now. And Appfolio actually recently released their quarterly results actually today, just after the market closed. And their results were quite promising, smashing analyst estimates. They had an EPS of 65 cents, which is a lot better than the March 31st quarter, which only had 2 cents per share. And this was done in the quarter where a lot of the economy in the United States is actually shut down. So Appfolio was able to find a way to strive in the face of adversity. And ultimately, this is why I chose Appfolio as one of the 2 stocks that I'm looking to buy in August. If you guys enjoyed this video, let me know by smashing that thumbs up button, as well as the subscribe button and the notification bell. And if you have any questions about these 2 businesses or have any comments on them or anything that I missed in this video, let me know down in the comments down below so that you guys can learn from each other as well as I can learn from you. And again, if you're looking to invest in US stocks, I definitely recommend investing with QUESTRADE as they have the lowest commission fees for you as an investor. You can sign up down below and get $50 in credit towards commission fees. Keep up the grind and have a great day.